In this video, traders, we're going to answer the question, how can you possibly know when price will push through a level? Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so let's go check out channel sponsor. There's a link in the description below and other good stuff for you down there too. So if you haven't been in the description for a while, maybe you're on mobile, go and check it out. Okay, so this was a question on one of my videos a while back, or a comment, should I say, one of my videos a while back. I appreciate all your comments, guys, whatever they may be. You know, appreciate them, appreciate your support and subscription, all that kind of good stuff. Okay, so this guy had said, right, listen, don't believe any of this stuff you're talking about, because I've been talking in the video about price pushing through a level, and I touched on a little bit of tape / price action reading and saying, okay, if you're looking at the speed of the move, you're looking at the kind of order flow, and it's a thing that you develop over time. You develop a skillful reading how price responds. It's kind of really the cornerstone of Jesse Livermore's strategy. Many traders have done that. You know, they're feeling how price moves. A lot of pick traders would do this, and one of the kind of pushbacks that this chap had was said, hey, listen, this is total BS. I don't think you can possibly know when price is going to push through a level. And he kind of gave an example. It's going to probe, and you look at the speed of this and that and the other. And to be honest, it's a great kind of thing to bring up. You know, it's a great point to bring up and say, how can you possibly know? Because really, it just sounds like it's complete nonsense, doesn't it? How can you possibly know? There's a couple of answers to this. The first thing is let's kind of approach the tape reading aspect and the price action aspect. As you get more experience, like anything, you start to see patterns that you've seen before. You start to see things that you've noticed occur before a break or before a fake. Now, does that mean it's always going to be the case? No, it doesn't. And the analogy that, not the best analogy you could use, is if you're a driver and you're driving along, sometimes you just know that the guy in front of you is going to switch lanes without indicating he's going to cut you up. You just know it, right? You just sense it. And if you freeze framed it in your mind, you'd probably be able to go, well, he was a bit hesitant at the junction back. Maybe I saw him at cancel indicator back and I just remembered that now. Maybe his road position is a bit funny. Maybe I can see him glancing in the mirror. Maybe it's a type of vehicle. You know, there's also things that you kind of process and go, I'm going to back off a bit because I think that guy's just going to swing over. And then sure enough, he swings over, you go, wow. You know, but that happens more often than not. And that's a little bit of intuition. Now, this is the kind of thing that as we're trading, I'm not going to be too hairy-fairy about this, guys, but this is the kind of thing that, you know, great traders will harness, they will utilize to their advantage, and especially great short-term traders, and many great short-term traders are just pure tape readers. They will just look at what's happening on the order book and say, that looks like a strong market, that looks like somebody is buying and they don't care what price they want to pay. I'm going to hit the trade, I'm going to take it. Now, the other answer to that question is, how can you possibly know when a price will push through a level? You can't. That's the wrong way to look at things. With the greatest respect to you, this is not the way to look at stuff. The way to look at stuff is to change your perspective and go, you will never ever know if price is going to go through. Never. It's impossible. It's an impossible puzzle to solve. All we're trying to solve as traders is we're trying to say, hey, you know what? This happened many times before price finally went through a level. Whether that's a chart pattern, like a good drive up after earnings, whether it's a flag, whether it's whatever, whether it's short-term tape reading and looking at order flow, the speed of the tape, the pace of the tape, you're seeing, you know, large orders, you're seeing how far it's pulling back, you're seeing all those kind of little nuances. You'll never ever truly know, because validly, someone could be sitting right here with a big thick order and you don't know, or someone could come in a millisecond after and put a big thick sell order in and smash the thing. News could come out, anything could come out. We never know, but we're not trying to know. If we take a step back and move to the side and look at the problem from a different perspective, we're not trying to know, we're trying to look at things that occur more often than not before the outcome. So if we say, okay, what occurs before a breakout? We think the price is going to break out. What occurs before a breakout has done historically that we could use as a clue that gives us a sign that potentially that's the more likely outcome than a fake out. And then we might go some momentum beforehand. We might go some kind of catalyst. We might then go some tape pattern. We might do this, we might do that. There's so many things we can do. And then That's part of the job. That's not even the whole job. And even then we don't know. That's why we move to the risk management portion. That's why it's so key, because we express the trade idea, which is it's a breakout, using some of the stuff that we've done, whether it's tape, whether it's charts, whatever. And we've gone, okay, really, we think that when we see that, we are expecting more often than not it to break out. Still don't know. That's when we use the risk management. That's when the risk reward ratio comes in. That's when all that other stuff comes in to allow us to be wrong on this. That gives us the slight edge of saying, hey, we're going to be right. We think this is going to break out. We still don't know and we don't care. That's when we come in with our risk management and go, right, where can I express this trade with the least amount of risk possible? And that's just not the tightest stop possible. That's based on the pattern and the most amount of reward. And even then the trade might fall at that hurdle. It might just rip on and on. We say I'm not chasing it because it could pull back massively. It might pull back, start to flag above highs. Great. Now I'm going to get in the trade. You might get in a trade on the breakout because you can do it so many ways. But going back to the initial point, how can you possibly know? You can't know. And that's not what we're trying to do. And it's something that, hey guys, we all fall into this trap. I fall into this trap right at the beginning of my trading career. I want to know if it's going to do this. How can I find out? How can I solve this problem? How can I tell if price is going to stop? How can I tell if price is going to break through? How can I know? I want to know. And that's the logical thing that we're trying to achieve. But in actual fact, the breakthrough comes, again, sidestepping, looking at it through a different lens and going, I don't need to know. All I need to know is, okay, what's the likelihood? What's the chances? Have the chances gone a little bit more in our favor? Yes, they have, because I've seen this many times before. Okay, now this is where the risk reward portion comes in. That's why we get people with strategies who, there's a winning strategy, but if you don't employ good risk management, then they're useless. And so it's bringing everything together. We don't want to know, we don't need to know. But if we have some clues and then we can allocate the right risk capital at the right point and take the trade in the right manner, that's when over time our expectation then becomes positive, and over time, however many occurrences that is, over time we hopefully get a positive expectancy out of it. We hopefully get profit from that setup, from that trade. We don't know the individual trade, but over time we're expecting, if we add and stack these layers of edge together, we use strict risk management, we'll still be here 10, 20, 40, 50 years in time, and the markets will have been kind to us. Anyway, appreciate the questions. I like these kind of questions, guys, because they make they make you think about. Hopefully, everybody's thinking now about different aspects and stuff, and they're valid questions. They're valid pushbacks and questions, and appreciate them. So anyway, guys, take care. See you next one. Bye bye.